What's going on YouTube? In today's video, we're going to be watching Bloomberg's market and finance video on if we're heading into a market recession, hosted with the National Association of Home Builders CEO, Jerry Howard. They're going to speak on if there is a pending recession and if home builders are going to continue building their projects or if they're going to hold off and wait for all this to blow over. Right now, we're already seeing a lot of the market softening. We're seeing less people buying homes. We're seeing lenders nationwide doing less volume than they did over the past few months. So I'm excited to see what this person has to say. So without further ado, let's hop on in.
No better conversation to have than with Jerry Howard. You know him as the CEO of the National Association of Home Builders. And sir, I'm wondering sort of your key takeaway from this report, how you're reading it.
Well, the only way we can read it is that it looks like we're heading into a housing recession.
Ba-boom.
And if that is indeed the case, it doesn't bode well for the economy as a whole. There's still some hope that things can turn around, but we're getting more and more pessimistic.
Home builders getting more pessimistic, yet still the affordability question there, the need for more supply. When we look at the housing starts data that we're going to get a little bit later in the week, are people still going to want to be breaking ground, Jerry?
No, I think people are going to start to hold off. In fact, when I travel the country and talk to builders, a lot of them are starting to get very, very cautious about whether they're going to break down. That's particularly true in the spec market, but it's also true in the market where they are negotiating with customers for sales right now, because at the same time as we're seeing inflation on the mortgage rates and interest, we're also seeing increases in construction costs that are really throwing the market off.
So it's like a double whammy. Construction costs are going up and demand's going down. So 9 months down the road when the house is actually completed, they're not going to be able to sell the property for as much as they wanted to, and it costs them more. So they're going to lose profit. It seems like they're going to hold off on these deals, which is bad for the housing supply in general because we still are in a huge demand for supply.
What I'm really worried about is historically, housing has led us into every recession since World War II, but it's also led us out of every recession since World War II.
And we can see from the graph too, housing permits were going along steadily. Then during COVID, it crashed down because people just weren't building during COVID. Then it recovered spectacularly, and now we are around here and it's starting to go down. So we still aren't quite at these COVID levels, but it is going down relative to where it was before.
The supply shortage we have, with the fact that we're getting hit at both ends of the pipeline, cost of construction and then cost of loans, I don't know that we'd be able to lead us out of a recession. I think that this is a potentially dangerous situation.
I'm wondering if you can draw out a little bit more some of the supply side issues here, Jerry. If confidence is hitting a new multi-year low, then what does this mean in terms of the broader issues that you can see among builders and all the people who are in the supply side?
Well, you're going to see builders do what they do in terms of a recessionary climate. They'll retrench a little bit. Some of them will start taking on contracts for larger remodeling and renovation projects. You'll see them, as I mentioned, stop doing any spec housing. And on the supply side, hopefully, this situation will drive policymakers to the conclusion that we need to have a long-term lumber agreement with Canada, that we need to get the supply chain fixed, and that we need to get rid of some of the regulations, particularly at the state and local level, but also the federal level, that are increasing the cost of housing. And then lastly, we need to look at our labor supplies over the long term. There are still hundreds of thousands of jobs out there in the construction sector that haven't been filled.
So it's interesting because it seems like a lot of the contractors, instead of creating their own homes and creating new developments, they're probably going to go more into the remodeling side. So they're going to work for clients. They're going to work for people who want to just fix up their own houses, because in that case, these GCs and these developers are taking on less risk. They don't have to buy the property and renovate it and sell at a profit. They can instead take these client side jobs, service-based businesses, fix up the houses, and then make their profit to ride out this long wave. This guy also makes a really good point, because at some point, this is not just the developer's issue. This is something that has to happen on a nationwide level with policymakers and contracts with different countries to get lumber in place and supply chains fixed.
So how do you square that? If you have a number of jobs that are open that haven't been filled, and yet you're starting to see a slowdown, is sort of this quote, if we get there, housing recession, due to a supply issue, or are there more concerns about a demand issue?
Well, the more interest rates go up, the more it becomes a demand issue. It's sort of a catch-22, if you will. The demand had been very, very strong. We never fully stopped seeing demand as we came out of the Great Recession. So demand was out there, household formation is strong, but if people can't afford to buy, particularly the first-time home buyer can't get into the market, that has an impact across the board.
So when interest rates go up, prices are supposed to go down, but in this case, it seems like prices aren't really going down. So what happens is people just can't afford the homes anymore.
Jerry, how much duress are home builders under to lower their prices? How much are they worrying about, well, the people who have signed contracts but haven't yet got their houses and what the knock-on effects are there?
Well, a lot of those contracts had escalator clauses in them, believe it or not, that the builder would expect if he had to pay more for some of the materials that the customer would pick up the price at the back end, or they would cancel the contract. I'm starting to hear more and more now about cancellation of contracts in the last month and a half.
So there's a lot of people who actually buy these new homes in different phases. Like it's just a lot, or they have a shell and they haven't actually put on the nice finishings. And they get in a contract knowing that they won't actually move in the home for at least 6 months. During that time, a lot of things can change. Like for example, the interest rates have increased. So people who were supposedly locked in on a property are seeing their interest rates increasing and now seeing, oh my God, I can't afford this house anymore. And so they're backing out of their contract for this new build.
I have ever before.
To the extent that prices can start falling in the housing market, then how do they fall? How fast do they fall? And do they fall fast enough to avert any potential future issues?
Well, that's an interesting question because we haven't had this situation before where we're going into a recession, but we still have major supply shortages. And I guess it's going to depend upon how recessionary the rest of the economy gets as to how this will all balance out in the end. Right now, I think that if this recession is, as our economists are saying, relatively shallow, and we come out of it by the middle or the end of next year, I think we'll be okay. But if it gets any more dire, that's when I think we're going to have a longer term and a deeper problem.
What is the historical lead time? If housing is the leading indicator, what signals are you next looking for?
I think the next signal that we have to look for is the labor markets and unemployment. In fact, right now, in a conversation I had today with some economists, that is the only signal that's outstanding that would keep us from saying we're definitely heading into a recession.
Okay, so that was Bloomberg's market and finance video on if we're heading into a housing recession by the NAHB CEO. I thought it was a very interesting video because you're getting an insight on these developers who are creating, a bunch of houses for new supply, basically first-time home buyers to live in a certain community. And really, when it comes down to real estate, new home supply is what matters the most. With new home supply means prices can go down, rents can go down. It's a lot better solution versus forcing someone to sell their house at a lower price or renting their home at a lower price with rent control. And seeing the housing slowdown is very interesting. These guys are way above where we are, these local mom and pop investors. So they know a lot more than we do. So seeing that signals that there's going to be something coming up in the very near future. So if you're looking to buy a house right now, I would say just be careful. Make sure that your interest rate is locked, ideally up into the period of where you can actually close on these properties. Because like I mentioned before, you could have gotten a contract on a property 6 months ago, and 6 months later when you have to actually close on it, interest rates can spike. Also be careful too, because it seems like demand is lower. Maybe prices won't actually keep going up over the next 6 months. They may actually go down. So if you can, maybe hold off and wait till the property is actually completed building before actually buying the property. And if you guys are interested in seeing what the actual real estate market looks like, go and check out this video that I did over here about the July Bay Area real estate market update. Thanks for watching, guys. I'll see you next time. Take care.